I certainly think we're going to see a 2 in front of the number more than a 1. So, we've seen gold trading at around 2,000 plus or minus $50, I think, for about the last two months now. Certainly, since the regional banking crisis in the United States that started around early April, we saw gold shoot up to close to an all-time high, and it's really stayed close to that level. As I say, it seems to be building a new base at around 2,000. Certainly, there are short-term fluctuations that are going to affect it from day to day, but I think the longer term is that we're going to see plenty of support in terms of the price building.
In a recent interview with David Lin, a gold analyst and CEO of U.S. GoldMining, Tim Smith shared his bullish outlook for the gold market. Smith predicts that gold will reach $2,400 per ounce in 2023. The regional banking crisis in the United States has increased demand for gold as a safe haven asset. Gold is seen as a hedge against inflation and economic uncertainty and is often bought up when there is fear in the markets. Central banks worldwide have also been increasing their gold reserves in recent years, which is a sign of confidence in gold as a store of value. BRICS countries like China, Russia, and India have been particularly active in buying gold. Smith believes that the regional banking crisis in the United States will continue to be a significant driver of gold prices in the near future. He also believes that the increasing demand for gold by central banks will continue to support gold prices. Smith further highlights the long-term pattern of rising gold prices. Over the past several years, gold has consistently experienced an upward trend, and Smith expects this trend to persist. He emphasizes that gold is a finite resource and anticipates its demand will continue increasing. Regarding the performance of gold in 2023, Smith highlights that this year has proven to be exceptionally favorable for its price, with a remarkable surge of approximately 20% since the conclusion of October or the beginning of November in the previous year. Expressing his confidence in the gold market, he suggests it is primed for a significant bull market in the forthcoming months and years. We will now present you with clips from Tim Smith's interview with David Lin. But wait, there's more. To stay updated with all our future uploads, make sure to hit that subscribe button and turn on post notifications. Thank you, and enjoy the video.
We see a number of factors across the broader economy that is generally pointing towards a high gold price over the longer term. 2023 so far has been very good for the price of gold. In fact, if we go back a little further towards the end of October, early November, since then in 22, we've seen gold up about $300. That's about a 20% increase in the past 6 or 7 months. And, certainly it's been a great time for us to launch a brand new gold copper exploration company. In terms of short through to longer term prospects for gold market, I would actually suggest that in my 27 years in the industry, I don't think I've ever seen a setup that looks quite like it will support a major bull market in the coming months and years for gold in the way that we're seeing it currently. I think we can look at some other commentators, certainly much more preeminent commentators than myself. We look at somebody like Pierre Lassonde, of course, founder of Franco-Nevada, and some would say the father of the gold royalties and streaming. He's been quoted over the last year as saying that gold will hit $2,400 over the medium term. And when he said that, he was really talking about 2023. And over the next 5 years, he was quoted as saying it could hit anywhere up to $10,000 and as much as $25,000 over the next 30 years. This is one of the big names in the gold industry. Of course, we can look at factors such as geopolitical tension. Obviously around the world, which means that gold as a safe haven and a store of value will have moments where we will see those spikes in price. We've seen the spikes before, and one of the other things we can look at is the demand for gold. Certainly we're seeing that there is a lot more buying by the central banks. We can look at the BRICS countries, for example, but this is also widely reported globally that there are various economies that are looking to move away and perhaps support their economy less from previous traditional reliance on the US dollar as perhaps the default global reserve currency, but starting to put gold into their vaults to support their economies. The World Gold Council, for example, recently reported there's been an increase in demand for gold by central banks every quarter since at least the start of last year, and that included a 228% increase in Q1 of this year. So we'll look forward to see what the Q2 numbers look like shortly. And this is the highest amount of central bank buying since the 1950s. And I think it's interesting because not only is it indicating that those large developing economies have a strategy to build their own reserves and, as I say, move away from their reliance on the US dollar as a form of global reserve currency, but also perhaps points to a weakening of the US dollar over time. And also clearly this is going to be driving up the demand for physical gold. As I say, they're really starting to move away from their reliance on the US. I think BRICS countries in particular, the Brazil, Russia, India, and China and so on, are really looking at developing an alternative in terms of being tied to the US dollar as they have in the past. We're seeing the petrodollar, for example, is starting to be challenged. And I think generally these countries, they have their long-term models of independence away from the US dollar. So as a general impact on the gold price, weakening, softening of the US dollar will tend to, it will create weakness that will tend to support the gold price as the market moves towards gold as a long-term stable store of value as a hedge against those fluctuations.
During the interview, Smith also mentioned that he had observed increased gold production and efficiencies in the mining industry over the past few years. However, he believed the global industry's ability to sustain this production level would eventually face challenges. The reserves and resources were not expected to support further production increases or even maintain current levels. Smith highlights that the gold mining industry will need to find new ways to increase its efficiency and productivity in order to meet the growing demand for gold. He suggested that the industry could focus on developing new technologies to extract gold from lower-grade ores or find new ways to recycle gold. Let's get back to the interview.
We've actually seen it go up, production go up over the last couple of years. So certainly as a number of big mines and general efficiencies in the mining industry have come on stream, we have, as a global industry, been able to increase production. That would tend to put downward pressure on the gold price. So I think, what we're looking at is longer term, simply, you have to read the numbers, and the reserves and the resources are not going to sustain either increased production or even production at the current levels. Geologically, in terms of peak production, certainly discoveries are becoming harder to come by. They're getting deeper, they're getting lower grade. Certainly the ESG factor is starting to weigh in, the societal implications of making the discovery, and then looking essentially for social acceptance from the local community wherever you are. The gold industry has certainly been working hard at cleaning up its image over the last 10 to 20 years, really bringing in sustainability as a core value to make sure that the broader public and all stakeholders understand that gold mining can be completed sustainably, and it's certainly a far better solution to optimize the realization of that value in the ground via the alternative, which is artisanal and oftentimes, in a lot of jurisdictions around the world, illegal mining practices that really don't pay any heed to sustainability, either short or long-term environmental harm. Well, certainly we see exploration costs traditionally of around, say, $5 to $10 per ounce. And yes, it would be much cheaper if discoveries were guaranteed. But unfortunately, exploration is not guaranteed. There is natural geologic risk. And I mentioned the time factor also. So if you were to make a discovery, it might take you 20 years to delineate, undertake the feasibility studies, the environmental baseline studies, and the permitting before you're ready to get that project through ultimately to construction, and those ounces come on. From a basket of the largest gold mining companies around the world, that their reserves and resources in the ground over the last 10 years have reduced by almost 50%. In other words, the biggest gold mining companies are not replacing their mined ounces via exploration, which is traditionally how they would have done that over the last 50 years. We saw major discovery booms through the 70s, 80s, 90s, into the early 2000s. We're not seeing that. We haven't seen that since 2010s. Discoveries are becoming harder to come by. Those producers still need to sustain their production. So how do they do that? They're doing it via acquisition. And they're having to do that via an increasingly smaller and smaller supply of large, high-quality deposits in safe jurisdictions where they're comfortable with the risk profile. And, I would include our Whistler asset in that. We think Whistler, and we'll get to this, is an asset that the big gold mining companies will want to own as part of their project development portfolio in the longer term.
The price of gold is expected to remain high in the near future. The regional banking crisis in the United States and the increasing demand for gold by central banks are two significant factors that are likely to support gold prices. In addition, the long-term pattern of rising gold prices suggests that the upward trend is expected to persist. Do you think the price of gold will reach $2,400 per ounce in 2023? Please leave your comments and observations in the comments section below. Also, be sure to like this video, subscribe to the channel, and enable notifications to stay up to date on our latest videos on silver, gold, and copper. Thanks for watching.